To combat slowing growth, many countries have engaged in expansionist monetary policies. However, which countries have been the most successful, and what are the long-term impacts of quantitative easing? Professor Yusaf Akbar, who is currently visiting Stockholm School of Economics in Riga, discusses these questions with Dukascopy TV. If we compare the US, Japan and UK, three countries that are notorious for their aggressive quantitative easing, which country do you think has been the most successful and why?
I think clearly the United States. I think because being the world's largest economy, having the world's largest reserve currency, I think the inflationary impact of quantitative easing on the US is going to have a more profound impact than even the reserve currencies of the pound sterling and the Japanese yen. By the way, we haven't talked about this before, but I'm really not convinced that Japanese monetary policy is any different from what they've been trying in the last 2 decades. I actually lived in Japan in the 90s, just when the bubble burst, and they've been continuously struggling to actually get the economy off the ground. So although the yen has weakened substantially, it's gone back above the 100 against the dollar, that should help Japanese exporters, which in theory should help kind of drive Japanese growth. You've got to counterbalance that with the increased costs of imports of energy. Right? Because after the Fukushima disaster in Japan, of course, a lot of Japan's nuclear power is basically offline because of the accident. So now they have to import more energy than they've had to do for many, many years. So even though Toyota and Honda report improved financial results in Q1, the cost of energy is going to go up. So on balance, what we gain in export revenues, we may lose in terms of outgoing payments for energy in Japan.
And many critics of QE were concerned that this monetary policy would lead to inflation, if not hyperinflation. But if we look at the current situation, we do see that the US is on the verge of deflation, and Japan has been battling deflation for over a decade. Why do you think then inflation has not really occurred in these countries?
Well, I mean, I think there are two answers to that question. The first is a kind of theoretical answer about what causes inflation, and I think the vast majority of analysts who make the case for the potential for an inflationary bubble, they use a monetarist theory of the price level. So they argue that there is a direct linkage between price inflation and monetary growth. So if you keep pumping money into the economy, that should automatically translate into higher prices. I mean, that's classic Milton Friedman sort of monetary theory. If you take a slightly more heterodox view, a slightly more nuanced view of it, I would say that the sources of inflation are multi-factor sources. Monetary growth is one of them, but don't forget, all of the major industrialized economies have a massive debt overhang, right? So with this large debt overhang, you're not going to get a sudden increase in aggregate demand from customers rushing to the shops to buy goods that aren't yet on the bookshelf, on the shop shelves, which is the starting point for inflation. Too much money chasing too few goods, right? So, in that sense, I think there's going to be a while before consumers pay down their debt, before they're going to start taking this extra money that they're getting from the various monetary authorities and go out and spend it on new goods, which actually is not going to make work. The policy won't work. You won't get increased growth because you have to pay this debt down. So I'm one of these people that says that, of course, printing money indefinitely is potentially inflationary, but the evidence right now suggests we don't see any major, let me be careful, we don't see any major price bubbles in consumer goods. That's a different question from asset prices. I mean, look, the Dow Jones is at record highs. You've got to be worried about that, and it might be related to quantitative easing, but that's a slightly different topic from, I think, the one we're talking about here.
What are the consequences of accommodative monetary policy in the long run?
So exactly. So in the long run, once you get back to what you might call a normal business cycle, right? So where debt levels are back to sort of historical averages, where production levels are back to average, where unemployment is close to the natural rate of unemployment, which you could debate. then if you continue to print money, then you should expect an increase in the price level. But this is exactly what Bernanke has said. Bernanke has gone on record and said, look, I've got an unemployment target, and the moment I hit that target, which I think is 6.5%, right, I'm going to stop printing money. So I think the monetary authorities are aware of the dangers of quantitative easing as you approach the natural rate of unemployment. What I don't think we know, which I think is historically unprecedented, is we haven't really seen a period in history where everyone is doing it at the same time. I mean, you pointed out three big monetary authorities, but the European Central Bank cut the rate last week. The Australians cut their rate to historical lows. So it's not just in the really big economies. We're seeing it in the Eurozone, which ironically has this price stability target, in Australia and other parts of the world. So I don't think we've ever seen a period in world history where everybody is pursuing the same monetary inflation.
But what do you think could be the most effective way to exit QE? Because there are also concerns that if you exit QE in an effective way, that could actually damage the fragile economic growth that we have right now.
Correct. That's the problem. This is why this is an unknown, because this is a new experiment. We don't have any historical experience of significant. This term quantitative easing is such a euphemism for printing money. Let's just call it what it is. We don't have a historical period of printing money at this level. So we don't really know what happens when you stop printing money. And so for those people, I don't necessarily agree with all of what they say, but there are a group of people out there that are talking about the next financial crisis in terms of this quantitative easing. Right? We're creating this new bubble, and we're basically feeding the world free money. And when you take the addict off the drug, what happens next? And some people who are more pessimistic than me are predicting doom. That this is another bubble, and the difference between the real estate bubble in 2008 and the internet bubble at the start of the century, this is global. Everybody's doing it. So we could have a serious problem. We could really have a global asset price contraction, and that could be a disaster.
Not very positive.
I'm trying not to be negative. Right? I mean, that's what the really negative people are talking about.
Well, this is what Professor Yusaf Akbar had to say about the unconventional monetary policies in different parts of the world. For more exclusive interviews, stay tuned with Dukascopy TV.